Wow, that was one hell of a rest. So how long exactly was I out? It was like a week, a month? Really? It's been that long? Wow, okay, so what's new? What's going on? President who? Whoa, that's a thing. Welcome back. I missed you. The Stamos missed you. I hope on some level you missed me a little bit too. Let's get into it. First off, it seems that the warnings that I offered a few years ago about the Toronto real estate market are finally coming to pass. Took a minute because over the last few months, the price of a detached house in Toronto has dropped about 30%. Now to put that 30% number in perspective, during the height or depths of the US housing crisis, prices dropped there 32% peak to trough. And I think things are going to get even worse in Toronto for a couple of reasons. First, the net migration will save us narrative is, as many narratives, kind of a silly one. Turns out that we built actually much more housing than we took in new migrants into the city. To look specifically at the numbers, I no longer use a cue card, I'm now all high tech. Between 2011 and 2016 in Toronto or in the Greater Toronto Area, we created 175,825 new units of housing. And in that time, 146,200 new families or households were formed. The idea that there's a lot of people coming into the city, therefore real estate is always going to be up in price, doesn't really hold water. There's actually a lot more housing per family than we had back in 2011. So that narrative is silly. Secondly, and most importantly in my view, the new stress test that's coming out in the fall of 2017 is actually going to put another torpedo in the side of Toronto real estate market. We've had a stress test for a while now, and the way it worked basically is that if you didn't have 20% to put down as a down payment, you had to get CMHC insurance, and in that circumstance you had to qualify for the mortgage rate you were paying plus 200 basis points. Now, a lot of people got around that through the bank of mommy and daddy. I call it the bank of love. So you'd hit mommy and daddy up for a little bit more money to get you over that 20% hurdle. Off you went and you bought the house or the condo typically that you could barely afford. Now, the stress test, that was almost Christopher Walken like there. Now, the stress test is gonna take it up the ass. Anyway, now the stress test is a bit more spicy in that no matter what the size of your down payment is, you're going to have to qualify for your mortgage rate plus 200 basis points. Or if you're suffering some financial stress and or you're refinancing and you've lost money on your house recently, you're going to have to qualify for that rate plus 300 basis points. So basically what that's going to do in my view is take a large percentage of the demand function away from Toronto real estate, right? Because it doesn't matter whether interest rates have risen 200 basis points or 300 basis points. The fact of the matter is, if you need to qualify at that rate, it's effectively the same thing. And I think that's going to put the second torpedo in the side of Toronto real estate. So the price losses we've seen over the last couple of months are going to continue and they're going to accelerate. Now, there's ample evidence to suggest that those central bankers who dropped interest rates to near record lows over the life of the financial crisis and created a bunch of bubbles and near bubbles in the process, are starting to actually coordinate their efforts upwards, and so we're seeing an upward trend in interest rates generally. But I don't think that's actually, I don't think we have to wait for the central bankers to actually raise rates. If OSFI, the Office of the Superintendent of Financial Institutions, forces the banks to say, act as if interest rates are 2% higher than they are, or 3% higher than they are, that's actually basically the same thing. It's going to drive a lot of people out of the market. In my view, slowing housing is particularly scary given the large number of industries that rely on it. Housing and housing related issues. That coupled with the fact that our man-boy PM is going to be raising taxes and raising debt suggests this is a particularly scary time for Canadians, and that's one of the primary reasons why I restarted this channel, so I hope you tune in. Finally, a message to millennials. In the words of the great prophet Chuck D, don't believe the hype. Many people, probably your parents, have told you that real estate is the path to wealth in this country. And more of you are taking on 30-year amortizations. 30 years to tie yourself to one asset and to tie yourself to a stream of payments is a long time, and that's a huge commitment. Put 30 years in perspective. 30 years ago, Walk Like an Egyptian by the Bangles and Here I Go Again by Whitesnake were #1 chart toppers in this country. So a lot has happened, and a lot happens in 30 years. If you look at who actually made the most money from real estate, if you look at the chart of bank stocks in this country relative to the rising price of real estate since 2000, we know who did really well, and it's the banks. They were on the other side of the transaction from you, the mortgage or or the person who's taken on a mortgage. Again, with Chuck D, remember, I said there's a need to be alarmed. Again, I said I was a time bomb. Thanks very much for listening. Welcome back to the channel. Hope you enjoyed it, and I hope you stay tuned or subscribe. If you like it, hit the like button. If you haven't yet subscribed, hit the subscribe button. Where those things are on screen, I don't know. See you next time.